Assalamualaikum warahmatullahi wabarakatuh. Good morning, good afternoon, good evening, ladies and gentlemen. Good morning, good afternoon, good evening, our esteemed lecturer, Prof. Pearson, Prof. Napsia. Today I'm going to present my short proposal for my dissertation with the title of The Effect of Foreign Direct Investment Deregulation Towards Cumulative Abnormal Return in the Indonesian Stock Market. I'm going to start with the timeline for this presentation. I'm going to start off with the introduction, and then I'm going to end this presentation by discussing my theoretical framework for my research proposal. So first off, the introduction of the research proposal assumed that there is an increase in globalization and a decrease in financial border. And because of this, there is a improvement in capital movement between countries and countries to countries, and it is now becoming easier for investors to find financial assets that could match their investment portfolio or risk characteristic. And before, Indonesia was somewhat protective in terms of their economy. They create policies such as the negative list, which protects vital industries and sectors from foreign direct investors. So although investors now could potentially have more chances in investing their money, but in Indonesia, which is a lucrative market, they could not do so because of this protective policy. But with the newly elected president and with the newly shifting in trend of macroeconomic policy, Indonesia is now becoming more open towards the international economy, especially foreign direct investors and foreign direct investment. We could see that by a financial deregulation, especially in the FDI deregulation, which trying to shorten the negative list that I've mentioned before by taking out some of the industries and sectors that were previously listed on those lists, so that so that investors could now potentially invest on these industries and sectors. And as you can see on the graph here, from 2015 to 2016, FDI, foreign direct investment inflow to Indonesia, was actually decreasing. But when the FDI deregulation was implemented onto the 2016, we could see that there is an increase in FDI inflow to Indonesia, accompanied by a positive trend. So it is now crucial for us to see what are the micro and macroeconomic impact that the FDI deregulation has towards the Indonesian economy, especially on the Indonesian stock market. And we're going to now talk about the basic applied continuum of my research. And as you can see here, the basic applied continuum of the research is a range between two variables, and my research will be placed in between those variables. And the closer my research to a certain variable, the more similar it is to that variables. And between external and socially constructed, my research is more similar to external when we view the nature of reality. And between objective and subjective, my research will be more objective. And between observable phenomena and subjective, meaning my research will be more about objective phenomena, because observable phenomena, because the phenomena of foreign direct investment increase in foreign direct investment inflow or the deregulation of foreign direct investment policy is actually observable by the market and all the players inside the market. And between law-like generalization and details of specific, my research will be more leaning more towards law-like generalization. However, because in business, or especially in economy, we could not generalize all the theory that are accepted heavily accepted in the field of economics and business, just because sometimes it could not translate well into the specific condition of a country or specific condition of economy, such as the Fama and French three factors model. Maybe it could predict it could better predict the movement of asset return, stock return in a developed country, but it failed to predict the movement of asset return in developing country. And lastly, it is more value fee compared to value bound, because the researcher could not tamper with the data so that it is more value free. And the research question of this research is what are the impact on and determinants of cumulative abnormal returns caused by FDI deregulation in Indonesia. And the objective, which is derived from the research question, is to investigate the impact on the determinants of a cumulative abnormal return caused by FDI deregulation in Indonesia. The literature review will discuss the following. First, we will discuss this research. We will discuss about foreign direct investment, its nature, its influence on the economy and on the stock market, and also its description, its meaning towards the economy, whether it's the driver of the economy, and so on and so forth. And then we will also see, this research will also talk about the economic policy influence on the economy and FDI. And lastly, the literature review in this research will try to discuss about FDI-led deregulation influence on the stock market. The research philosophy for this research could be seen from two different points of view. First, we could talk about it epistemologically. Epistemologically speaking, the research philosophy that this research will employ will be positivism. Ontologically speaking, the ontological point of view that this research will try to employ is objectivism. And both from the epistemological and ontological, we now have positivism. So the main research philosophy that this research will try to employ is positivism. The research approach of this research will be constructed based on these four variables, which are the logic, assuming that assumption is true means that the conclusion is true, generalizability, where we take a broad theory and then put it into a specific context or specific events, and the use of data, where data will act as a guidance for testing the correctness of hypotheses and the correctness of the assumptions. And lastly, the theory, which this research will try to disprove or prove by testing it in a certain context or a certain specific event, phenomena. And all of this will create will show that the research approach that this research will employ is a deduction approach. And then we're going to talk about the theoretical framework. The theoretical framework that this research is going to employ is the capital asset pricing model, which is found by Littner and Sharpe in 1964. By Littner in 1964. And the CAPM model has actually been undergone an evolution from and improvement from 1964, such as in 1993, Fama and French improved the CAPM by creating a Fama and French three-factor model, and then on 2013 there is another evolution of the CAPM called the arbitrage pricing theory, and then on 2015 there is another improvement from the 1993 Fama and French three-factor model into a five-factor model. But generally speaking, CAPM branch of evolution could be determined into two separate branch. The first branch talks about the specific factors that are only exist inside the company. In the Fama and French three-factor and five-factor model, all the factors are variables that comes from the company itself, such as size or investment and so on and so forth. But another branch of evolution which is the asset pricing, arbitrage pricing theory, postulates that the CAPM model could better explain the asset return or stock return by being combined with macroeconomic variables such as inflation, such as interest rates, and these macroeconomic variables could help CAPM better explains the movement of stock return and asset return. And these are the theoretical framework that my research will be using for my dissertation. And that is all for my presentation. I am sorry if I misspoken something, and hope you have a good time in listening to my research presentation. Thank you for listening. I'll see you next time. Wassalamualaikum warahmatullahi wabarakatuh.